So when it doubles in age, then it does a 60x price multiple, which is kind of amazing.
If this pattern breaks, that's kind of like I don't know, like the more things that can break to do with the 4-year cycle, the better. So it'd be kind of like a constellation prize win or something if we had a little bit of a red candle and broke this pattern, right? As large capital comes in, from different global players, it's not healthy. Other people have talked about this on X as well. It's not healthy to have Bitcoin known as this asset that you can basically you sell it every 4 years to trade a cycle.
By the end of the month, we should be getting around 7.6. And today we're at 6.6. And we had a nice little bumpy start there. But at the end of the day, this is not deterministic. You look at these signals, you look at the housing market, you're like, okay, something's kind of got to give here. And then they have to let a huge let the floodgates open.
This is a total different macro backdrop compared to the, going to the last bear market, right? So people thinking like, oh, everything's going to be the same. Well, the backdrop is not the same. We know that for sure. Things are very different.
Guys, happy Wednesday. The gang is back. Plan C, we missed you. How you doing, buddy?
Good to be back. Looking forward to another show here. And it was a good break. And you guys did some great shows last 2 weeks. If people missed them, they should tune in. They were really good. So you got some good guests on. And looking forward to being back with you guys here and getting into things.
Smithy was a soldier, always here with me. So thank you so much for doing that. How's things with you?
Great. It's been really great doing these with you guys. And I feel like we have our third leg of the stool back now that Plan C is back. So super excited to do this with you guys.
Hey guys, exciting news. April 27 to 29, I'll be attending the Bitcoin conference in Las Vegas. If you're planning on going, please stop me, say hello. Let's connect in real life. In the box down below, you will find a 10% discount voucher. Use it to grab your ticket before it's too late. If you're enjoying my content, it will mean the world to me if you could subscribe to the channel and like my video to support my journey. Thank you. Exactly. Crazy Wednesday today because in 3 hours and 35 minutes, we have the FOMC meeting and there is a super high chance, 89%, that they're going to cut rates. I don't know how you guys feel, but I think there's going to be volatility coming.
Right around rate cuts, usually before and after potential volatility. We kind of saw a bit of a move up yesterday, so we've also given away a lot of those gains already. So it could go either way. I have no clue short term. Like obviously it depends on. I mean, everyone's expecting it looks like the 25 basis points. Correct? That's basically what this is showing. Anything other than 25 basis points would be kind of a shock to the market, I guess. Yeah, I mean, if we get no rate cut, that obviously be pretty bearish for markets overall, usually, right? And then if we got 50, I mean, low chance, but that would be interesting if we got 50. So we'll see.
Heading in the right direction, right? So it's anything to sort of loosen up the capital flows, get the markets moving. I think back to the PMI indicator, and I just think, okay, I think it is kind of going back in the right direction. So maybe this will help push us over 50. I think the risk on. We'll start to launch, but it's going to be a little bit gradual before it's explosive. It's exciting.
Gradually, then suddenly, as we say in the Bitcoin space, right? All right, Plan C, you haven't seen this channel in a bit. This is our trading, non-trading channel, of course. We bounced off from a very important moment there.
Yeah, we I remember when we kind of like adjusted this down a bit, and this does look like the correct way to do it. And it looks like we have kind of bounced at the line again. So, I mean, the channel looks intact to me, and we'll see if we hold it, obviously if we hold it or not.
Again, a reminder, do not trade based on this. This is a trading, non-trading signal. Right?
Yeah, exactly. And this is weekly candles. That's the other thing people should, it's weekly. So we actually, it looks like we wicked down. It was hard to kind of see there, but we wicked down pretty close to the line.
Yeah, basically on the line.
We did kind of. Oh wow, the big red was basically on the line.
Yeah, it's funny. The longer I stare at this channel, the more little subtle patterns I start to pick out, and then I feel myself turning into a TA guy. But
that's the danger. That's the danger with these lines.
That's the danger, right? You stare into the abyss, and then the abyss stares back. I mean, it's pretty cool. 3 years, and I don't know if I have one post that shows. So beginning of 2024 up to now, we have like this oscillation that you see, this peak. Fall, peak crash. It's oscillating around the median power law, like really well. So there's that too.
Yeah, what's interesting to me here is the middle channel, because there's been some sort of a support rejection consistently. See how we got rejected super well here as well, and we just gone down. So I don't know, there's maybe something here, maybe not, but I wanted to pick your brain here, guys, as well, because we have a few days left before we might be able to break these 1, 2, 3 green, 1 red, 1, 2, 3 green, 1 red, 1, 2. I guess we'll have to see. I was chatting with Plan C off camera earlier. We were saying, we kind of want it to break.
Well, I'm mixed about it because I'd love to close the year above 100,000. I think that would be a huge win for the Bulls, right? Given the fact that we really, if you think about it, we're essentially, if we do say we close over 100,000, right? The low for the year was 75 or 76. I can't remember. I think it was 76. And then obviously the high was 126, right? So you could just roughly say we basically traded for a year plus between 75 and 125,000, just keeping it simple. So 100 is basically right in the middle of that, right? And it's also a massive psychological level. To kind of be, above that midpoint of the huge range, you could say, that we traded or consolidated for over a year, that to me would be pretty bullish and pretty. It'd just be a win for the Bulls, simply put. I mean, it's kind of a minor win, you could say, given the fact that of how big this last drop was and how fast it was. But if you just look at it as a massive trading range, and we're kind of like back above the middle or at the midpoint, I think that's great. So that's kind of, but it also, like you said, if this pattern breaks, that's kind of like I don't know, like the more things that can break to do with the 4-year cycle, the better. So it'd be kind of like a constellation prize win or something if we had a little bit of a red candle and broke this pattern, right? But so either way, right? But I guess if we have a minor red candle, we could still be 70, like high 90s or something, right? What's the highest we can be but still put in a red candle, I guess, is my question.
93.5.
I think you answered that. 93. Okay.
Yeah.
Oh, 93. Okay.
I think we're going to beat that.
Yeah, we'll probably be above that, I think.
I don't know how you feel, Smithy, but yeah, I kind of want it to break.
I mean, we're all for destroying narratives, right? The breaker of narratives. Mauricio.
Exactly.
But we can break it in different ways, right? We can just put it on an all-time high next year, and that'll break it too. So we don't need to have this this close red to break the narrative, I guess, because after this, so say this closes green, the next year should close red, right? So if we just have another green year next year, that breaks it too. So either way. Obviously, I just want us to keep going up. that'd be ideal, but we'll see.
Is it only because you want to see expectations shaken, or is it because you don't mind the price being low for extended periods of time? Because I know Plan C, we've talked about that too, where it's like I know that like generally the whole community kind of freaks out when the price goes down, but I've met a good proportion of Bitcoiners out there who feel sort of the opposite. So I think it depends on your positioning a little bit. And yeah, I mean, at the end of the day, I don't really care about this, 1-1-1, green, red pattern that much, I think. But I do think there's a decent probability we climb above 100.
I don't care much about this either, but the reason why I want this to break is because if we do close green, then all those 4-year cycles corroborates are coming back. See, this time is the same, we can break it either way. If we do a new all-time high in January, then the cycles are broken technically, or super cycle, whatever you want to label it. But by breaking it now, it's going to confuse so many people because wait, I was expecting 3 green candles. And also, it's going to allow us to scoop up Bitcoin for cheap. So, hey.
Yeah, I mean, I guess just a couple quick things. So one is, I actually think it's extremely important to break this 4-year cycle narrative. I think I might have talked about this before, but I think it's actually it's a really bullish thing to break this narrative, because as large capital comes in, from different global players, it's not healthy. Other people have talked about this on X as well. It's not healthy to have Bitcoin known as this asset that you can basically you sell it every 4 years to trade a cycle, because it just deters people just to allocate for the long term. And we want Bitcoin to be less predictable than that. In my opinion, we'd rather have it be something that is not like known as some speculative trading asset that will just fluctuate massively every couple of years. Like, it's better to have these kind of random pullbacks that are maybe 50% or 40% or 30% or whatever, like just have healthy pullbacks, have consolidation periods, but not these huge 80% drawdowns every 4 years or 70% drawdowns that are so predictable and everyone just sells, right? Because that's going to create more game theory and just it's less likely to become a global store of value and a global kind of allocated asset, in my opinion. So I actually think it's really important to break this narrative. However we do it, I don't care, but I want to shout at this because I think it served its purpose up until this point to kind of get adoption and kind of create a really low point that everyone can kind of get in and still get a good amount of X's. But I just don't think it's healthy to keep having these like 80-90% pullbacks. Like, I just people look at it as too volatile, or they're less likely to use it as like a long-term store of value that way, more of a trade. Does that
Yeah.
make sense?
Yeah,
Yeah, it
I
does. Yeah.
agree. Uh-huh.
I don't mind like little pullbacks so that we can accumulate more. Like that's great, right? I just kind of like the whole 4-year cycle thing. I'm not loving it.
Yeah, quickly on Fear and Greed, we are at 26, which is honestly, super weird to see Bitcoin chilling at $91,000 and we are down in the year. So for the past few weeks, it's been an absolute carnage. So it's another interesting indicator for sure. Quickly on the returns, you can see December is positive, 1.9 so far after a horrible November and a okay-ish negative, I guess, October. Smithy, you have finally brought back your thing, so I'm super excited about this. I love those monthly return charts.
Yeah, it can always be a little, it matters what level of analysis we kind of have, right? If we look at the month to month monthlies, like you said, we had an okayish October back in October. We also had our latest all-time high, 126. It matters to do the zoom in, zoom out. But yeah, I like to follow up your monthly here with the within month. So I've been tracking, due to popular demand, the daily returns within every month. I think I was doing this since October, which turned out to be a floptober. And then November turned out to be no November. And
Yeah.
then this is basically tracking every historical December, right? And that's each of these lines that you see from 2010, I think, all the way up to today. And so you see there's a decent spread. The cloud there is the 25 to 75th percentile, and the white line is simply the median. It's not the strongest month historically, but it is overall a on average, or per median. By the end of the month, we should be getting around 7.6, and today we're at 6.6, and we had a nice little bumpy start there. But at the end of the day, this is not deterministic, and I showed an analysis last month that what 1 month's performance looks like really has no predictive power as to what the following month is going to be. So it's really just to show how we're doing relative to past years for the month of December. And we're looking good. So if we keep floating along that strong, that bold white line, you could easily see $100,000 in our future. And so, yeah, if we stay at this sort of percentile, we should be right just at the margin of hitting a green versus red candle. Back to your graph. After the all-time high, we hit that pretty deep drawdown, and then October started getting really bad. I think it was around now. Like today is the 10th. So it was just a matter of days after the all-time high, it started going below the line significantly.
Right.
So.
And then last month we were quite a bit below the trend line, right? So
correct.
Yeah. So it's interesting. Yeah. We are following it, kind of above it to following it, which is interesting.
So we deserve a green month. Come on, we deserve a good December because no one is expecting it. So Christmas is on its way. Yeah. So ETFs inflow outflow has been a bit weird, as you can see here in the table. We had a horrible December 4th, but then kind of a ping pong between gentle inflow, gentle outflow. I guess not much here. We've seen moments where numbers were way bigger, right? But Plan C, I love what you've done here because you asked your following if they thought 80,600 was the bottom.
It's somewhat of a mixed, right? It's pretty close to 50-50. But what I thought was interesting was I ran this on the 26th of November, and then I ran it December 8th, and I got literally almost the exact same poll number. It shows that polls are pretty, I believe, at least if you're polling your same audience, right? Like, so, I mean, they both got close to pretty much 5,000 votes. So it's a good sample size. The numbers were very consistent, right? Like and we were a little bit higher, I believe, when I ran the second poll. So I was like, okay, are more people thinking the bottom's in now? Because we're like, I think 4 or 5K higher than when I ran the first poll. And no, it's basically the exact same. The people that think this is not what the low is not in, they're sticking to their guns. They're kind of stubborn. And then it hasn't converted on many people. Now, if I run this when we break like 100,000, I'll assume the number is going to change. The people that are kind of set in the 4-year cycle, I guess you could say, or thinking there's still going to be a lower low, they're not budging at this point. They're not phased. A lot of people are saying this is a bull trap, right, or a bear flag or whatever. Like people are basically saying we're going to go lower. This is kind of a relief rally, and then we're going to dump, right? That's kind of the narrative with the bulls. They're like, yeah, this is just a typical kind of recovery after a steep decline, which I get it. I mean, they have legitimate points. Usually bear flags, I believe, for TA, like they take place over 3-4 weeks. They're about the same percentage of what we've seen as far as like this kind of rising price, get back some of the losses, and then you dump lower. So at this point, that they could be completely correct, right? There's no way to know.
Yeah, that kind of bounce, right? So they're expecting a bounce back in, I guess,
Yeah, I
10.
don't know. That's an interesting poll though. It might be worth bringing back. As we if we keep crab crawling, it sort of seems like with the Fed decision. So with the announcement, we'll see. But the 25 basis points, it's like it's not a huge cut, right? And this is what we've seen in more recent times. There have been some posts by this Milk Road macro. I don't know if you guys follow them, but they kind of are predicting a change in the QE structure. I don't know for how long to the future, but it kind of feels like this idea where instead of having this reactive super deep rate cuts QE emergency style kind of QE, it seems like they're changing the protocol a little bit, or I don't know, we'll see how it plays out. But it in some ways I see the economy just kind of wants to snap in some ways. Like if you look at the 10-year, you look at the bond situation in Japan, you look at these signals, you look at the housing market, you're like, okay, something's kind of got to give here. And then they have to let a huge let the floodgates open. And then at the same time, it seems like the Fed is being sort of gentle with their issuing of new rate cuts. So we'll see how much of an effect it has. It might just push us over 100K. Or on the other hand, we could have something much bigger break that nobody expects. And then they really, really have to make some deeper cuts and bigger decisions. But
Yeah, I'm
yeah,
definitely not ruling that out either. Like, I don't really know if I do call it a black swan because these things, like you said, were kind of
yeah,
being observed right now. Like we do as like yeah, like everything you said, right? Like these kind of conservative rate cuts or whatever. They're taking their time to kind
yeah,
of cut rates over a longer period. The business cycle we talked about, it's kind of lagging where it would be normally. This is a total different macro backdrop compared to the going to the last bear market, right? So people thinking like, oh, everything's going to be the same. Well, the backdrop is not the same. We know that for sure. Things are very different. They were tightening right to end last cycle. Right now they're loosening slowly. So it's opposite, right, in many ways. But then this idea of like it does feel like something could break, like you said, and I've been thinking the same thing, and that would cause probably a pretty dramatic short-term drop in Bitcoin, right? Because everything would react.
yes, yeah,
Yeah, volatility goes through the roof. People want liquidity. Bitcoin's liquid easily, so we have a sharp drop with Bitcoin, but then a very fast recovery, like a V shape. That's where my one of my base cases you could say is something breaks, a very fast V-shaped drop for Bitcoin, but then a really fast recovery because they're gonna print, they're gonna step in. If something breaks that's significant, they're gonna step in with liquidity, and then Bitcoin just recovers right away. So it's like, okay, we could have a really good buying opportunity. I still don't think it sends us into a deep bear market. I think it just causes more of like a black swan COVID like thing, and then we continue on.
yeah.
But so that's
I agree.
kind of like the X factor in the room for me. Is it's there might be, we don't know for sure. Nothing might break. Like it might just continue to go the way it's going. Great, that's one scenario. My base case is that we still put it an all time high next year, but there might be a good buying opportunity. So for people that are looking for that, it's kind of like a good time to be. I'm not giving any financial advice, but if you believe in my base case, then you might be DCAing, but then you also might have a little bit of capital ready for like another significant drop of some kind, depending on where you think it could go to, right? But people can make their own decisions. We're not giving financial advice here. This is a daily data going back just over 2 months. So basically, since we started downtrending from the all-time high, we have respected this line extremely well, right? We've bounced off. We got rejected multiple times at this line, either wicks, like you can see that one was like a perfect wick up to the line, multiple rejections at the line at various points. And then yesterday we had our big green candle during the day. We had an intraday huge green candle. I think we went up to like 94 and a half, I want to say. So we were above the line. And I'm thinking, okay, this is the breakout. Like we're finally breaking out of this line. And then we closed below it. So I'm like, we got rejected again. So, I mean, the thing is, this is quite a steep downtrend line. So all we have to do at this point is just have a couple days, like 1 or 2 days, where we just go sideways and we'll be through this line. Again, I'd like to see us blow through this line, but it looks like unless we have a hard rejection here now, on the bear scenario, if somehow after the rate cuts today we dump to like 88 or 87, that could signal another rejection here. And then if that does happen, honestly, I think we're probably going to go below 80,000. Like we're probably going to break the low because that's another clean rejection at this point, at this line. I mean, I think we're going to break through it. That's my base case. But if we do get a hard rejection here, I mean, that would increase the probability from my standpoint that we actually do go through the lows of 80. As much as that would suck, that's the way you would read this from a TA standpoint. Again, I'm not putting all my weight into one metric in TA, but I don't know what you guys think of this downtrend line, if it has any significance or not.
TA is funny, because I could say, oh, this is a bear flag, or oh, this is a higher high, lower low. You can, based on what you decide to draw and chart, it could change narrative completely, right? So there's definitely an impact of this downtrend for sure. But then I could chart a bunch of bear flags here. I could chart a channel on the rise. There's so many different
Well,
ways.
it is a rising channel. Yeah, like since we had the low, I also drew that. It's basically we've had a couple hits on both sides. If you look at on the hourly, we've basically been bouncing in this kind of like upward channel. Which, I mean, again, you could argue if it's a bear flag, whatever. But the thing is, I like looking with TA. If I'm going to use TA, I like looking at as long of patterns as possible, right? So like the RSI, looking at the full data set, looking at the weekly, to me, that's like, okay, that's like TA has a little bit more validity if you're looking at really high time frames, right?
I agree. Yeah.
So because on the shorter time frames, I mean, it's just a randomness, right? So at least this is daily data. At least it's over 2 months. But again, it's just a line at the end of the day. It's just a line on a chart. So it doesn't have to hold or break or what it is. Yeah.
I feel pretty much the same with you guys. I keep like what I want to do is I look at these, definitely these levels are interesting, these kind of plateaus. And I'm not really a TA guy. So as far as the actions, you guys would know a lot more than me, but I look at these kind of benchtop movements and I'm like, okay, well, then I want to go back and look at the macro stuff. I'm like, well, what's going on with gold and copper? And I was just looking, and I think gold has sort of stagnated. It was kind of getting excited again. And then around the 26th of November, I think it's now it's kind of plateaued. So I don't know. It looked like gold was getting really excited again like a month ago. And then now it's chilling out. I haven't seen a correlation there yet, but I'm just, makes me want to look into other corresponding indicators. So I don't know. We'll see.
Speaking of macro, I love what you tweeted. This is one of my favorite things I've seen in a while.
Thanks. What this is I wanted a very simple way to show. I wanted to not even mention the power law outright because I use the term so often. I feel like sometimes just need to, there's a lot of kind of controversy around that for some reason. But what I wanted to show is the self-similar patterns that you see. And I'm going to have a follow-up post here. Pretty cool. It's going to be a pretty cool animation. But you have these heuristics that you can use as a result of it being self-similar. So if you're looking at the time window between 2009 and 2012, and then you start to expand that time window, I mean, the curve looks pretty much the same at any scale. That's really the beauty of it. What that actually, the implication of that, a really cool implication, is that you have fixed percentage growth of the asset's age. So like I'm 30, I'm not 30 years old, but let's say I'm 30 years old. I can predict like how big I'm going to be, if I'm gaining weight, how big I'm going to be when I am increasing by another 15 years of age when I turn 45. So that's a similar analogy of what we're doing here. Like when Bitcoin gets X percent older, what's the price multiple? How much higher is the price going to be? And it follows these heuristics with like remarkable accuracy, which is pretty cool. So I put these boxes and you slide the boxes up and down the kind of the model. And indeed, it plays out really well. And so you see my personal favorite is that when Bitcoin doubles in age, when it gets twice as old. So today it's going to be 17 years old in January. So when it doubles in age, then it does a 60x price multiple, which is kind of amazing. That's my favorite one because I can hold in my head when I double something. But I was seeing kind of Fred and Steven respond to it saying they really like the 50-10 ratio, which I also really like too. It's kind of when I take half my age and add that, half the age of Bitcoin and add it forward, so it gets 50% older, then it 10x's. So it's a nice clean 10x rule, but it holds up really well.
I love this.
Yeah, I love this as well, man. This is a great visual. It makes a lot of sense. It completely, I mean, it's all accurate and really well done. I like the 50 and the 67%, because 60 just from 50 to 67 is another 10x there, which is interesting, right? But people have to understand. People would say, well, I thought there was diminishing returns with Bitcoin. This still works with diminishing returns because with a slowing down of CAGR is another way to say it. It sounds better than saying diminishing returns. A slowing down of the CAGR with Bitcoin historically is what we've seen with this pattern. But the thing is, it's all relative to the data set, right? So if you go back to that first box, we had less age, right? We were younger. So to get to 100%, was a lower amount of time. So to get the 60x
Yes.
took a lot lower. Obviously, you can see that visually. As for people that are maybe not fully understanding it, that doubling obviously it takes more time to kind of get the same gain. So you still have the slowing down of the CAGR, the diminishing returns, but you have a way of quantifying if this pattern continues to hold, which is the most significant pattern we have for Bitcoin by far. You can kind of calculate, okay, for the trend line, right? This is a great way to look at it. Kind of remove all the noise, look at the median, and say, okay, 3, 10, 20, and 60x. I can calculate roughly how many years to get there. And I think it's a great way of looking at it. It's a zoomed out chart, which I like because people get too stuck in the TA bear flag bull trap, It's like this is really what matters if you're a long-term investor. Honestly, you just need charts, like a couple charts like this, and you're just like, okay, I'm just going to chill out, let Bitcoin do what it does in the short term, and long term, I'm targeting these kind of returns, right?
Forget the 4-hour candles and the 1-hour candle. This is the only one that matters, right? I always have a blast with you guys, so make sure to go and follow Plan C and Smithy on X, and we'll see you guys next week. Thank you both, guys. Always a pleasure.
Yeah, take care, guys. Have a great week.
Thanks again.
Ciao.
Yeah,
bye-bye.
Take care, guys.